Okay, can you guys see my screen now?
Yes.
Okay, fine, right? So we're doing lecture example 1.2 and then 1.3 as well, right? So lecture example 1.2 here, right? They're telling us that we need to prepare the statement of profit or loss and the statement of changes in equity and also the statement of financial position. Okay, so here they're asking us for the three statements, of course, right? Uh, this is important for you guys to understand as well and know because it might be tested in your in venue thing, right? So when we're doing our statements, basically what's important for you guys to know is the format and also what goes where, right? So we have what we call five elements, right? We have our assets, liabilities, income, expenses, and equity, right? So for the statement of profit or loss, we have our income and expenses. For our statement in changes in equity, we have all our equity, meaning that it's our drawings, our profits, our capital contributions, and so forth. And in our statement of financial position, we have our assets, equity, and liability. All right. Okay. So now they gave us a trial balance here with figures. So what they want us to do here is basically substitute all of these accounts or these elements, right, into their respective places. Okay. So we're gonna start with the statement of profit or loss in this context, right? So we can open a Word document even here, right? You can just come here and just open a new document like this, right? Okay. So they gave us the trial balance. So what we can do when doing such an activity, right, guys, is write the name of the business. Number one, right? So it's going to be what? Luck, good luck services, right? Good luck services statement of profit or loss for the year, right? Sorry, for the year ended 31 December 2011, right? So it's the name of the entity and also the type of statement you are doing, right? Okay. Once you figured that out, then it's important to know our format. So of course it's gonna always be our income and then we're gonna have our expenses, right? And then we just need to know what goes where in this context, right? So it means that we need to come back to our information, right? Let's look at our incomes and expenses. So to make things easier for ourselves, we can just highlight our incomes and expenses. So let's just go in order, right? Is advertising cost income, guys? Or is it an expense? Or is it equity? Is it an asset or what?
It's an expense.
It's an expense, so we can highlight it, right? Bank charges?
Expense.
Expense. Okay, thank you so much. Bank overdraft?
The liability.
It's a liability, so we can leave it. Capital?
Is it income?
Well, in this context, our capital doesn't fall under our income. It would fall under our equity, right? Because this is the money that business owners invest in the business. But we don't see it as income because income for us is basically money we receive from selling goods or money we get on a day-to-day basis. So our capital wouldn't fall part of our income even though money is coming in our bank account. It would fall under our equity. So we would just leave that blank, right? It wouldn't go under our statement of profit or loss, right? And then basically cash on hand is money we have that's spare, right? But this is gonna be what?
Equity.
Yes, it falls under our equity because it's an asset, right? It's an asset. It's gonna be our non-current asset. And then drawings,
Expense.
again, the problem with drawings is that it's treated like an expense, right? However, it affects our statement of equity because if we go to the definition of an expense, right? The definition of an expense is a decrease in assets or an increase in liabilities that result in a decrease in equity other than those relating to the contribution of shareholders, right? So because drawings is money taken out of the business by the owners, it can't be considered as an expense but rather equity, right? So it would fall under the statement of changes in equity. And then our furniture, inventory, and land and buildings are all our assets, so we'd leave them blank, right? Mortgage bond is a liability, payable is a liability, receivable is an asset because this is people that owe us money that are going to pay us soon, right? But I think from this point onwards, yes, from this point onwards, right? Our rent expense is an expense, repairs is an expense, salaries are an expense, and service rendered is income. This is money we get when we offer a service, right? And then this something we're missing. Let me just check. Are we missing any information? Um, nope, we are not, right? I think we've highlighted all the incomes and assets. I mean, incomes and expenses, right? So now that we know this information, it's easy for us now to do the statement of profit or loss, right? So how are we gonna go about it? We're going to come here and then under our income, we have uh, we have services rendered, right? Services rendered, and then we can just put an amount there. It was given as 750,000, right? Then our expenses. Okay, this can be not bold because it's not its own thing. Then under our expenses, we can list the stuff that we just highlighted now, which are as follows: advertising, bank, rent, repairs, salaries, right? So we can just have them underneath each other. It doesn't matter which order. So it can be advertising, right? How much is our advertising for those that saw it?
18,000.
18,000, right? Okay, so we can just have advertising 18,000. After that, we can have bank charges. How much are our bank charges?
2,000.
2,000, so we can have it like this. After bank charges, we have rent expense as well. How much was that?
240,000.
240,000. After that, we have our repairs. And how much was our repairs?
70,000.
70,000. Lastly, we have our salaries, right? How much were our salaries?
360,000.
360,000. So now that we have all our expenses here, it's very important for us to add them into one amount, right? And once we do that, we're gonna put this amount in brackets. And how much is this figure gonna be? So 18 plus 2, that is 20,000. 20,000 plus 240 is 260. 260 plus this is gonna be 60. It's gonna be 330, right? If I'm not mistaken. And 330 plus 330, is it gonna be? Yeah, it's gonna be 690 if I'm not mistaken. 690,000. Am I correct? Can someone just
Yes,
confirm? Yes,
you are.
690,000. So it means that our expenses are 690,000, meaning that our profit for the year will be 750,000 minus 690,000, and this is going to give us a figure of 60,000 if my math serves me correct. Are we all on the same page, guys? Hey guys,
Yeah.
are we all understanding how we got to these figures?
Yeah.
Okay,
Yes.
thank you so much. So that is the statement of what? Profit or loss. So that's the easy part as well. Now we can move on to the statement of changes in equity. In equity for the period ended 31 December 2011. So this one again, it's also going to be very easy. Why? Because we're not dealing with many accounts, right? We're gonna just have our balance at the beginning of the year, right? Which is uh our balance at the beginning of the year. Our opening balance at the beginning of the year is the closing balance of the previous year. So we can just say 31 December 2010, right? Are we given our opening balance for our equity? Let's just check. Are we given our balance at the end of the year? I don't think we are given information about this, right? So what's gonna happen is, for now, we're just gonna leave that part blank, right? Because maybe we're gonna have to get the answer working upwards. And then we're gonna write our profit for the year. Our profit for the year, we already calculated it here to be what? 60,000, right?
Sorry, is the balance not the capital that we were given, that was given in the question?
Let me just have a look here. Let me just check it out. How much is our capital? 353. Yes, actually, yeah, it is. Yes, actually, thank you so much. Yeah. So our capital here is what we are given at the beginning of the year. Thank you so much. Yes, so it's how much? 353. But we could also calculate the answer by doing the statement of financial position, and then I think we'd still get the same answer when we do the statement of financial position. But because it's given here, we can just say 353,000. So it's like this, right? Then we have our drawings for the year. And then our drawings for the year here, it was also given to be 30,000. However, this 30,000 is going to be in brackets because drawings decrease our equity, meaning that we're going to have to minus this amount, right? Meaning that our balance at the end of the year, which is 31 December 2011, is going to be 353,000 plus 60,000 minus 30,000, which is going to give us a figure of how much? It's gonna be 403,000 minus 30,000 is gonna be 383,000, if I'm not mistaken, like this. Are we all on the same page here as well, guys?
Yes.
Okay. Ayanda, Sisanda?
Yeah.
Okay. No questions so far?
No.
Okay, thank you so much, right? So that is how we would do our statement of what? Changes in equity. Then lastly, we have the statement of financial position as at 31 December 2011, like this, right? Like this. So now, again, what's important to here understand is the format. We have what we call assets, and then under assets, we have non-current assets, right? Non-current assets are assets that are held by the business for a period of more than 12 months. So, which are those types of assets? It's gonna be furniture, it's gonna be land and buildings, and it's gonna be mortgage bond. No, mortgage bond is not an asset, that's a liability. Sorry, furniture, land and buildings, and vehicles. Yes, because these are assets, and usually the company keeps them for more than 12 months. So if we have those ones, we can just come down and write them here. We can just say land and buildings. We can say furniture. And we can say vehicles. And then the amounts, of course, we can also write them here. Our land and buildings is gonna be 500,000. Our furniture, these amounts already given on the trial balance, right, guys? Is 40,000. And then our vehicles is going to be 130,000. Meaning that our total non-current assets are going to equal to how much? It's 500 plus 40 plus 130, so we can say 630 plus 40 is gonna be 670. So 670,000 is how we would get our answer. Is everyone fine with that? Guys, are we all on the same page?
Yeah.
Okay. Sisanda, Moodley, are we all good, guys?
Yes.
Okay. Fine. Then we look for our current assets. So current assets are assets that are held for a period of less than 12 months, meaning that we are able to easily liquidate these ones to cash if needed, right? So now what are these ones going to be? It's going to be our cash on hand, it's going to be our receivables, right? And it's also going to be our inventory, this part, inventory. So it's cash on hand, receivables, and inventory. These are easily converted to cash in a period of less than 12 months. So we can just come here and write inventories, and we're gonna have a figure of 35,000. Right? After inventories, we have receivables, and that's an amount of how much? 155,000. And then lastly, we have cash on hand. Usually, if it's not cash on hand, it's gonna then be bank, right, guys? Bank is also a current asset, meaning that our total current assets equate to how much? 185, 190. So it's gonna be how much? 193, right? So 193,000, like this. Are we all on the same page as well, guys?
Yes.
Okay, thank you so much. Right? So we're done with the assets part. Once we're done with the asset, we then gonna have to add our total assets, which is gonna be 670 plus 193, which is gonna give us a figure of 863,000. Right? Now we're done with the asset part. Now we come to what we call our equity and liability. So under equity, as mentioned, guys, we usually have capital and retained earnings, but in this context there is no mention about retained earnings, right? So we're just gonna say capital, which we already calculated previously to be uh 383,000 from the statement of changes in equity. So that amount is given, right? Because we calculated it. Then our liabilities, we have non-current liabilities. So these liabilities are liabilities that need to be paid for more than 12 months. And in this context, we have a mortgage bond. And the mortgage bond is how much? The mortgage bond is 400,000, right? Because when you pay a mortgage bond, it's going to take you more than 12 months to pay it. Hence why it's a non-current liability. And then for our current liabilities, which are liabilities that need to be paid within 12 months, we have our payable and our bank overdraft, right? A bank overdraft is basically them telling you that you borrowed the bank's money, right? If you have a bank account with, let's say, Standard Bank, and your balance goes to 0 rands, it means you don't have money. But if you spend with that card, for example, and the money is being deducted, it means that now Standard Bank has borrowed you money and you're taking from that money, which is a liability, and you need to pay it within 12 months, right? Okay, so our payable 65,000, and then our overdraft is gonna be 15,000, right? Meaning that our total current liabilities are going to be 80,000, right? 80,000, and then our total equity and liability would be 80,000 plus the 400,000 of the mortgage bond plus, actually no, how much is it going to be? It should be, yes, equity plus this plus this. How much is that going to give us plus this 80,000? It should give us a figure of 863,000 as well, like this. All right, guys. Are we all on the same page?
Yes.
Is there anyone perhaps with a question? Guys, are we all good?
Yes.
Okay. No question, guys? Is this too easy? What's going on? I'm worried now. Let me just
Now
check.
we good.
Now we good? We all good? Okay, so that means we done with 1.2, no? There's no questions, guys, with 1.2.
Nah, no questions.
Okay, fine. So I'm looking at 1.3 here. Because we just did 1.2, 1.3 is basically a continuation of that, because there's the statement of profit or loss, statement of changes in equity, and statement of financial position. So do you guys want to do that again, or do you just want to do the accounting equation part?
I just want to do the accounting equation parts.
Okay, Ayanda, Sisanda.
We can continue.
Okay, Sisanda, are you still with us? Is there someone in the chat box? I'm trying to connect my laptop. I'll join again. Okay, I think you're good now. Fine. So now we can do the accounting equation then for 1.3, right? Lecture example 1.3. So that was pretty much straightforward, right? So yeah, let's just do the accounting equation then, right? So when we do the accounting equation, what's important here to understand is the format, right? So you need to insert the table. It's gonna be like this. For assets equals owner's equities plus liabilities. So we can do something like this, right? Okay. So here's gonna be our assets, and then here's gonna be owner's equity, and then here's gonna be liability, like this. Fine. Now we can go through the questions. Benny Services commenced 1 January 2014. The following transactions were entered during January 2014. Benny deposits 100,000 as capital. Okay. So what's gonna happen to our bank account? Our bank account is going to increase by 100,000. Bank, right? So our assets are increasing, and our owner's equity is also increasing by 100,000, and this is gonna be capital contribution, right? Because our equity is increasing by 100,000, right? Then rent office space at 3,000 per month and pay the rent for January. So we are paying rent for January. So what's going to happen to our bank? Our bank is going to decrease by 3,000 because we are paying. Money is coming out of our bank account. And our owner's equity is decreasing by 3,000. Why? Because rent expense reduces our equity. Are we all on the same page, guys?
Yes.
Okay. Then we can move on to purchase stationery on credit at Rand City Stationers 400. So if we buy something on credit, automatically we need to know that it's a liability. So we're gonna just minus 400 Rand, and then you're just gonna say payable payable Rand City, right? And then we come to our owner's equity, and we're also gonna say minus 400 stationery, because stationery is what? Stationery is an expense, and our expenses decrease our equity. Are we all good?
Why did we decrease the payables and not increase them if
Because
we're
stationery
purchasing on
because
credit?
stationery is an expense, it's not income. So stationaries are gonna decrease our equity because our equity is worth less because stationery is an expense.
No,
Because
I'm talking about the one where we wrote payables Rand City. Why did it not? Why didn't we say plus 400?
sorry, I made a mistake. It's plus 400. Sorry.
Oh, okay.
Thank you. Yeah, yeah, yeah. It's plus 400. Why is it plus 400? It's plus 400 because now we owe the person. Yes, my bad. And if you do the accounting equation, it's gonna be equals to zero. Because for every transaction you do, guys, our owner's equities must always our accounting equation must always be like this. Assets equals owner's equity plus liability. So we're gonna have a situation with this transaction where our assets are zero and our owner's equity is minus 400 and our liability is plus 400, which gives us zero. So it's gonna be equal. Yeah, so it's plus liability 400. Sorry, guys. Right? Okay. Render services on credit to A Sanders. Okay, so if we render services on credit, it means that it's plus 2,500 because it's a receivable, right? We sold something to them on credit. So receivable, right? And then our owner's equity is going to increase also by how much? 2.5. Why? Because it's service rendered. Services rendered is basically income. So our income is increasing. 2.5, right? Then we move on again. Purchase a delivery vehicle from Motor Cities, 50,000. Pay a 10,000 deposit and the balance will be paid before December 31. So this is a bit challenging, so be with me. We're gonna say plus 50,000, right? Vehicle, because our assets are increasing by 50,000. Then minus 10,000 bank, because we are paying 10,000 now, meaning that the remainder, which is going to be 40,000, is going to be a payable, because this is how much we are still owing, right? So it's gonna be payable city motors. Are we all on the same page here, guys? Guys, same page?
Yes.
Ayanda, Sisanda?
Yeah.
Okay. Then we move on to pay wages 300. Again, this is simple. Wages is gonna be minus 300 rands. Bank, and then our owner's equity is going to be minus 300 wages, right? Pretty much straightforward there. Services rendered for cash 7,000. If we render services for cash 7,000, it's gonna be plus 7,000 bank and plus 7,000 services rendered. All on the same page?
Yes.
Okay, good.
Yeah.
Thank you so much. Then we can move on to the next transaction. Pay rent city stationaries the amount due. So we bought something on credit, right? From our people, that which we need to pay back. I think it was the stationery, right? So now that we're paying their stationery back, it's gonna be minus 400 bank because now we're actually paying them, and our liabilities are gonna be minus 400 because we owe them less because we're actually paying them now, right? City, like this. Are we all good?
Yes.
Okay. Then I think we have a last transaction which says pay for maintenance 800. So maintenance is an expense, so we can just come here and write minus 800 bank and then minus minus 800 here. Nope, not liabilities here, sorry. Minus 800 maintenance, which is an expense, like this. And basically, that is how you're going to do our accounting equation. Let me just highlight this part. Yeah, like this. Is everyone good here, guys?
Yes.
Okay. So that's 1.2 and 1.3 done. Um, and then let me just check something. 1.4 is also the counting equation and also the statements, which I think you guys are fine with now. So I'm not sure. There's two options we can do now. We can move on to chapter 2 today, or we can have another lesson again tomorrow, same time for an hour. What do you guys prefer doing?
Tomorrow, I won't be able to do so. If we can move on to chapter 2 today, that would be great.
Okay. We can just move on to chapter 2 also as well, right? Is everyone fine with that? Can we just do maybe one activity for chapter 2?
Yeah.
Okay. So I'm looking at chapter 2 now, 2.1. Uh, 2.1 is the accounting equation, right? So is 2.2 and 2.3 as well. And 2.4 is record the assets and liabilities, prefer the statement of profit or loss, and so forth. Okay, so these look very repetitive. So exactly which ones would you like us to do, guys? From these lecture examples between 2.1, 2, 3, and 4. Which ones do you guys think you struggled with the most, or the ones you think you'd appreciate the help?
2.4.
2.4. Okay. Ayanda, Sisanda. Sisanda, are you
I'm
with
good
me?
with that.
Are you with me, Sisanda? Just unmute your mind. I haven't heard your voice the whole lesson. I'm not sure if you're still alive. Sisanda's not with me, guys. Okay, so we can do 2.4 then, right? We can have a look at 2.4 now. So let's just do this shortly. I'm going to Jamie just also open 2.4 as well so that I can share my screen with you guys. Ne? Uh, so wait, since people are saying that tomorrow they're not available, can we host our lesson again on Thursday, guys? Is Thursday okay for you guys? Did you guys vote for Thursday, right? Is Thursday fine for you guys? Can I just get confirmation there?
Yeah,
Yes.
Thursday's fine.
Okay, Thursday same time, or do you guys prefer contact lesson?
Same time.
Same time online. Is online working for you guys?
Yes. Yes.
Okay, not a problem. So we're doing 2.4 now, ne? Okay. Well, this is the suggested solution, which is not what I'm looking for. Was it this one? Yeah. Okay. What is required from us here? Prepare the equation at the end of the month. So equation is accounting equation, right? Record the assets, statement of profit or loss, and the statement changes in equity. Okay, which do you guys prefer we do, guys, or do you guys prefer that we do everything here? Because low key it's the same thing, hey? Do you guys want us to do everything, or is there maybe a specific question you'd like us to do? If you guys want us to do everything, you're more than welcome to say as well, guys. I don't mind, hey?
We can do everything.
Okay, absolutely. Not a problem, hey? Fine. So let's start with accounting equation. Ne? Let us start with accounting equation. Uh, okay, so we can do something like this, right? Uh, we're gonna have, it's gonna be bank receivable, furniture, equipment. Uh, okay, now, but let's just do the normal accounting equation and then so we can still do something like this, and then the problem is here, let me just check, balance the equation at the end of the month. So okay, do we have opening balances and stuff? We do. And they're not asking for T accounts and stuff. Okay, so I think the best way to go about doing this would be like this. Just insert a table. So it's gonna be 1, 2, 3, 4, 5, 6, 7. So we can have 7 like this, right? We'll have bank here. We have receivables. We have furniture and equipment. We have payables. We have capital. We have equity. And we have profit. Let me just say profit just so that it looks nice, right? So the opening balances here, right, are given as 30, 13,000, 2,400, 38,000. Our payables will be 20,000. Our capital is 33,400, right? Is it? Let's just check. Wait. Wait. Our equipment. This is 38,000. We have this. 13,000, 2.4, 20,000 payable. Where's the 20,000? Okay, fine. 38,000 is fine. Okay, I think we can leave that for now. So we have that, right? So I think this part we can ignore. Okay, right? Let's have a look at our transactions now. Let us see. We paid water and electricity for the month 1,000. Okay, meaning that our bank is gonna what's gonna happen to our bank? Minus 1,000, right? So minus 1,000, right? And then we're gonna go to our profit, right, which is the statement of profit or loss, and minus 1,000 because our expenses decrease our profit, right? Then we can move on to the next one, which is received 3,000 cash for dry cleaning services. So our bank, what's gonna happen to our bank? Our bank is going to be plus 3,000, and then we're gonna come here and to our profit, it's gonna be plus 3,000, right? Okay. Next, we're gonna come paid payables 5,000. So if you pay our payables 5,000, Ivan, what happened to my thing now? Hey, um, I'm not sure what happened to my tab. Can you guys still see my screen?
Yes.
Yeah, but I'm not sure where my Word document is. Yes, sorry about that. Right? Yeah. So it's gonna be 5,000 minus because we're paying, right? And our payables is going to be what? Our payables is gonna be minus 5,000 because we owe people less now. Dye cleaning services rendered on credit for 6,000. Uh, what's gonna happen? We have dry cleaning services rendered for 6,000. Was it on credit? Let me just see. Yeah, it's on credit 6,000. So what does this mean? It means that our receivable is gonna be plus 6,000, right? And then our profit is going to be plus 6,000 because our income is increasing. Then we move on. The owner withdrew 2.2 for private use. So if someone withdraws money, what's gonna happen? Bank 2.2, right? And then our capital is decreasing. This is drawings, right? So again, 2,200. Then we paid for the following expenses: wages, rent, and telephone. So these are all expenses. So it's gonna be minus 1.4, right? And then our profit also minus 1.4. Then we're gonna say minus 500. Then it's minus 500, right? And then what else are we minusing? Let me just see. 75 rand. Minus 75 rand. Gonna come here. Minus 75 rand. And then minus 75 rand. And then allowed 200 discount to customer in D for an item damaged during dry clean, right? So someone, okay, we gave this person a dry service or dry cleaning services rendered on credit, but now we are giving them a discount, meaning that they owe us less, right? Meaning that our receivables is going to be minus 200, right? Because we owe them less, and this is going to come from our income from our services rendered, minus 200 as well. Are we all getting the same answers, guys? Do you guys understand how we got to these answers?
Yes.
Okay. Then when you do the accounting equation, our bank plus our receivable plus our furniture should should give us our payables plus capital plus equity or plus profit. So it should balance out, right? Fine. Now we can do the statement of what? We can do the statement of profit or loss, which is gonna be like this. So now with the statement of profit or loss, we're gonna come here and then we're gonna do this. Again, it's gonna be our income and it's gonna be our expenses. So what our incomes here? We know that it's services rendered. And then our expenses, we know that it's water and electricity. We know that it's wages. We know that it's rent expense. We also know that it's telephone. We know that it's loss due to damage, right? Damage of dry clean process, right? So how much is our services rendered? Let's just have a look here. It's gonna be 3,000 plus 6,000 here, right? Because we already did the accounting equation, it should be easier for us to get the final amount, right? Plus 6,000. So this is gonna be how much? 9,000, right? And then our expenses is going to be 1,000, right? 1,000, and then our wages are going to be 1.4, right? 1.4. Our rent expense is going to be 500. Our telephone is 75 rand if I'm not mistaken, and our loss due to the damages is 200, meaning that our expenses, we need to add all of them here. So it's going to be 1,000 plus 1,400, which is 2,400, plus 500, which is 2,900, plus 200, which is 3.1, plus 75 rand. So it's gonna be a total of 3,175, meaning that our profit for the month is going to be 9,000 minus 3,175, which is 5,825, like this. Are we all on the same page here, guys?
Yes.
Okay. And now for our statement of changes in equity, we're gonna have our balance at beginning of year, which is 30 December 20.2. We're gonna have our profit for the month. We're gonna have our drawings for the month, and then we're gonna have balance at the end of the month, right? Fine. Our profit for the month, we already calculated it, guys, now to be 5,825. Our drawings for the year, we also calculated it to be 2,200. So now we just need our balance at the beginning of the year, and we need our balance at the end of the year. Are we given anything for balance at the beginning of the year? Let's have a look. I don't think we are given the balance, but if we're not given the balance, then we can also again just do the statement of financial position and then get the answer for our drawings, right? Yeah, so I think we can do the statement of financial position first, and then we'll come back and finish this one. Yeah, we'll come back and finish this one, right? Okay, so let me just do this. I can highlight this in maybe orange so that we know that we need to come back here. Alright, so we can just move on to the next page here. Okay, so now what are we gonna do? Statement of financial position. Okay, we have our non-current assets, right? Then we're gonna have our current assets, then total assets. So we can start with our non-current assets, right? Non-current assets here, we only have furniture and equipment, right? So we're gonna come here and write furniture and equipment, and this was 38,000, right? And then our current assets, we're gonna have, let's have a look. Our current assets here, we have bank and receivables. So we're gonna say bank, and then we're gonna say receivables. Our bank here was 5,825, and our receivable here was 8.2, right? So meaning that our total current assets here is going to be how much? How much? Yeah, how much is it gonna be? Can someone just calculate this for me? 5,825 plus 8.2.
14,025.
14,025. Okay. Meaning that our total assets is gonna be 38,000 plus 14,025, which is gonna give us a figure of how much?
52,025.
52,025, like this. Right. Then we can move on to equity and liability. Here we're gonna have our capital, right? Which we don't know how much it is yet, so we'll come back to that, right? And then we have current liability. Our current liability, we have our payables, right? How much is our payables? Let's just have a look. Payables, they say 20,000, but we paid 5,000. So our payables is going to be what? 15,000, right? So we can just write 20,000 minus 5,000, and that's going to be 15,000. Okay. And then that's our current liability. Do we have non-current liabilities? No, we don't, right? Which then means our total equity and liability here is gonna be how much? We know that our our total assets are 52,025, which means that our total equity also needs to be 52,025 because they need to be equal. Which then means that our capital is gonna be 52,000 minus 15,000, right? Which is then gonna give us 37,025. Once we have this 37,025, it's easier for us to go back to our statement of changes in equity here and write 37,025, which then means that it's easy for us to calculate the balance at the beginning, because we're gonna say 37,025 plus 2,200 minus this amount, which I can't see now, is minus 5,825, and that's going to give us a figure of 33,400. Do you guys understand how we got to this, guys?
Yes.
Okay. Ayanda, Sisanda, are we good here?
Yeah.
Okay, that's good. I'm not sure if Sisanda's hearing me. Thumbs up, Sisanda. Can you hear me?
She was just here. She's in the bathroom.
Okay, not a problem. Fine, right? So basically, that's it in relation to lecture example 2.4 in a nutshell, guys. Right? So I'm not sure if you guys perhaps have a question that you'd like to ask.
No.
Okay, Ayanda, question maybe?
No.
Okay. So now, because our next meeting is on Thursday, guys, I wanted to ask now, what is it that you'd like us to do? Would you guys like us to continue and move on to lecture example 3 and then maybe do lecture example 3 and 4? Hey, guys.
Yes.
Okay. So, yeah, I think for today we've covered enough content in terms of lecture example 1 and 2. So, we can then move on to lecture example 3 and 4 then on Thursday. But of course, if you guys have questions, right, you're more than welcome to ask now or in the WhatsApp group chat, and then we can also take it from there. Is that fine with you guys?
Yes.
Yeah.
Okay, thank you so much, guys, for joining, and I hope that you guys enjoy the rest of your evening. All right.
Thank you. You too.
Okay, bye bye, guys.
Thank you.
Bye.